following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Hello, everybody, and welcome to the Option Block. This is Andrew Giovinazzi, the Option Lobster, filling in for Mark Longo. And again, very, very, very big shoes to fill. I'm with my friend, Mr. Grigas, who is going to introduce himself shortly. But as we stand right now, we're looking at quite a happy market today. And what we'll do is we'll dive right into the trading block.
The Trading Block.
All right, everybody, and welcome to the Trading Block. Obviously, I've just introduced myself, but we do have a smaller cast of characters today, but we do have the most important man from Options Express, Mr. John Grigas. How are you, sir?
Doing good, Andrew. Glad to see that you have finally taken over the hosting reins. Big shoes to fill. I'm sure you'll over-enunciate all your words and have great segments throughout the rest of the show. But yeah, good day on the markets today. We were kind of indicating that the possible bump in, everything today was a slight indication that Obama may have an early lead in the polls. Is that what you're hearing?
Actually, yeah. I mean, I think except the only thing that wasn't up today was volatility. I mean, you're absolutely right. I have oil closing, near-term contract 88.39 up 272. Gold, that fabulous metal, I have a feeling that's a nod to Bernanke staying on, maybe forever, up $33 today to 1716.60. And the S&P 500 up 11 handles to 1428.39. So I think if it was an asset, people were buying it. Is that kind of what came across your desk today?
Yeah, it was a happy day around the desk for the customers calling, and for those of us with individual positions as well. I didn't check how the volume was. Maybe you could look that up for me, but it just seemed like we were stagnant. And then once early polling results came back in, the market just took off. I'm going to bet that volume was probably pretty light. And it'll be interesting to see if this does hold through the rest of the week. Sometimes you get these moves on anticipation, and then they really don't have much follow through. But yeah, the overall sentiment on the phones was pretty bullish and pretty happy. I don't think the Apple callers participated much. Midday, I didn't get to check the market near the end of the day, but midday I know Apple was just hovering around unch to slightly lower. And like I said in previous podcasts, about 13% of all our volume done at Options Express is some type of Apple derivative. So those guys seem to be left on the party, but we'll see what the rest of the week holds.
Right. There's no volatility really without Apple in the options. I mean, if Apple's not going up, nobody wants to buy it.
Apple down $1.77 to $5.82. Actually, most of the stocks that I that I hold were showing the true to form in their garbage stocks. Groupon up 9 cents to just under $4. Bank of America, which I had talked about a week and a half ago, that had a nice bull flag, followed through. I think about last Thursday when it was up about 4%, was up almost 19 cents to 9.94, and then of course Schwab, which doesn't like Bernanke and doesn't like these low interest rates, so it was down 2 cents at 13.87. So I'm one of those people that didn't get to participate. I'm hoping that changes here tomorrow.
Yeah, I think we've had kind of a variety of positions on at Option Pit. I've been looking at a lot of stuff, a couple of earnings, and mostly really thinking how long can the volatility really stay where it is. And we've seen a couple things with the VIX cash being backward, at least 40 to 50 cents above the future, the November future all day. And we don't have a no future expires actually the week after expiration. So you get an extra 2 days and a nasty settlement. But waiting really to see what happens. So I'm trying to, I tend not to look at any news during the trading day. I kind of like to see what the numbers sort of play and how it all plays out. But my biggest surprise actually is that we actually had some volatility come in during the day, and it actually came down fairly hard. It backed off a little bit, but at one point I had the VIX down more about down about $1.20 or so. So I think from that point of view, a little bit of uncertainty is taken out of the market. I think there's still a wild card with this Greek election tomorrow. So I was watching the euro, but that actually did okay. But I'm just assuming because everybody wanted to buy probably a little piece of everything. And we had some, probably abnormally bad sentiment from Hurricane Sandy and some of those other things that were sort of washing over the market. But today almost felt like a relief rally to me, and maybe kind of the first shot across the bow that people that have been underinvested for most of 2012 might want to be getting back into it. Because it was I'm looking as I see it, it was a pretty broad-based rally today.
Yeah, I mean, they're really, tech seemed to lag a little bit. I mean, usually when you see the Dow up 140, 170 points, you get a little bit more out of the NASDAQ or the Apple index, but those didn't seem to participate. Just got a wave from Big Tim Navabi over there through the window, so I had to give him a thumbs up. Yeah, I mean, it didn't seem like the tech sector was participating much. I was trying to look for what was leading it. I thought maybe an indication with the polls that the healthcare stocks might be down, but they were up as well too. So kind of to your point, it did seem to be a broad-based rally in every stock that we looked at.
Oh, yeah. I mean, I think they just wanted a little of everything. I don't know how that will play out for the rest of the week. Mostly, generally, you kind of sell the rumor or buy the rumor and sell the news. I think in this case, at least from a volatility perspective, still being long volatility, I think going after today is going to be a tougher road to hoe for everybody, and maybe just long good old-fashioned stocks is going to be really the way to play. But I think we see how it goes till the end of this week. But as right now, the market is kind of happy before the election. Normally after the president gets elected, there is a bit of a rally. And in this case, I don't know if we had the rally the day before, but usually have a rally about 1 to 2 months afterward, under basically what we'll call sort of normal conditions. And I would say right now is semi-normal. The euro possibly imploding aside, if we get past that, I think we keep on trucking. But that's
I heard a news article that said that the last election, the markets were up about 3.3%. We obviously didn't see that today. Those were different times when 3% was about 180 points. But it was nice to see a rally, and hopefully we can see it follow through. I was looking at the VIX. They had a nice article on that earlier this morning, that the year-to-date average for the VIX this year is 17.9. And if you look at where we closed at today, at about 1760, 1758, I mean, we're right in line. And when you say the market is happy right now with a nice rally and see the VIX is hugging its average for the year, it kind of says that everything is falling in place here. I know the VIX was all over the place, but there didn't seem to be too much concern. When you saw that pop, you said in the late day, because it was down more, did you see people just coming in and buying out of them?
Yeah, that's what it looked like. There was just
security, or what were you?
I think there was a little over euphoria here with the rally, and the vol sag a little bit too much. We don't know exactly who's getting elected. We still don't know what the Greeks are going to decide, because it's the first time politicians have actually had to vote on an austerity package per se, and some real labor reforms and things like that. So, there's enough, even though the euro did rally, probably thinking it's going to happen. That's always enough just to keep volatility from sagging that little extra bit. So, and actually that's a good segue for us moving into the odd block, because we did have what I thought anyway, it's a truncated odd block, of course, because we don't have Mark here to really go through in painstaking detail the play-by-play of all the busiest stocks.
Yeah, I mean, who's gonna give us the information on securities that we've never heard of before?
Exactly.
I mean, we haven't visited the prison publicly traded security in about 3 months.
And here is the most bizarre publicly traded LP, 25,000 contracts traded on there, which were crossed, and we are trying to figure out exactly what happened. I guess we're kind of dissing him when he's not here. Is that nice to do?
Yeah, it's kind of what Mark and I do. We make fun of his segues and his beard, although I shouldn't say anything about his goatee right now, because for all your listeners out there probably aware it is Movember. So I do have a goatee on right now, and it'll turn into a mustache later tonight. But we're raising money in the office for men's health issues, and so, man, week one it's just bad looking guys here on the floor right now. It's disgusting, to say the least.
I think we couldn't get a better transition to the odd block after that. After hearing about men's facial hair, I think we've never had a better move into the odd block. So I think we'll move right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the Odd Block. This is Andrew Giovinazzi, the Option Lobster, coming to you live from Maine with John Grigas on this, what I'm going to call it the truly all-star panel. As we move into the Odd Block, just mostly today, early on in the day, around in the VIX, actually, something that maybe everybody's heard of, as opposed to some of the names that we normally have that come across the tape in the Odd Block. We had about 30,000 contracts trading on the No 16 put. Looked to be buying most of the day. They paid around 55-60 cents for them. They closed the day around 65-70 cents. Speculative out of the money put, but definitely thinking we could see a reduction in vol in the November cycle, which again in the VIX is going to be 2 days or the Wednesday after expiration, under normal expiration. So again, somebody betting some pretty good money, picking up 15 to 20,000 contracts probably on those puts very early this morning in different blocks. But by far the biggest contract traded in November were buying puts on the VIX on the No 16 line. So we'll see actually how that works out. I think we'll have a pretty good answer for that probably by Friday of this week. If the pattern has held for volatility, generally the Fridays seem to feel like the lows of the week, and we'll see if that again turns out to be true this week. So, John, do you have anything to add there for that VIX action?
Sure. Yeah, I mean, one thing I want to say is that you and Mark have been faded any rallies in the VIX, and has worked out well this late summer. I mean, are you still somewhat doing that, or still
Yes.
somewhat bearish on these pops?
We are actually. What we did though this time is we constructed kind of a little VIX backspread, which I was going to talk about in the strategy session.
Ooh, so stay tuned for that.
Yeah, so stay tuned for that. But it's a funky backspread in the VIX. Again, the inveterate, what does he call it? Degenerate option buyers. That's what we do. We buy options because they do degenerate or decay, but as long as the underlying moves faster, that's really all that counts. So we have had a play for that. Yeah, we have been fading this. although officially not fading it because we haven't had the great edge in the futures that we normally have. So we had to go to kind of a plan B strategy, and I will outline that for all those that want to stick around to it in the strategy block. But I think that'll wrap it up for us in the odd block, kind of a truncated version. And I believe since Mr. Grigas is here, we should roll right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And we'll start moving into the Express block. This is where, again, I get to, instead of having a cold beverage, I will go check my lobster pound and see how they're doing. And John will tell us what's going on in the land of OX.
You actually did say that you and your sons were at an age where they were actually going to set traps. What do you guys do that? Is that how it happened in the spring, I guess, right?
That'll be happening this spring. They're going to go into the firewood logging business as well. I've cut down so many trees now. We had so many fallen trees that they're going to have to learn how to use a wood splitter.
A wooden splitter? You mean, is that where you actually have to swing an axe yourself?
No. Well, you do have a wood splitter with like a maul you could cut, but they actually have these hydraulic things that where you put the piece of wood in and just breaks it all up. So
I have seen that.
It is, and it'll be. I think the child labor people will probably be after me, though, but I'm going to put them to work anyway, supervised, of course. But
yeah, of course, from the chair with a cocktail in the distance in the shaded area. Exactly. But one thing you rolled into the odd block with the VIX and the VIX play. We were talking about the VIX and specifically the volume that we've seen over the last 2 months. I know in I think it was August or September they had record volumes, and they just surpassed that in October. And with the VIX being below 20 since early summer in June, why are we seeing an uptick in volume? Is that because of the undecided election? Is that because of Europe? Or is it because they're getting broader acceptance in the financial industry? I mean, on the phones, I'm thinking that, we have more retail people taking a look at it. So I'm thinking the more broader acceptance, but I don't think retail is the one that's putting up these numbers. I wanted to get your input and think, why do you think we're seeing so much volume in the VIX month over month and breaking records month over month?
I think really people are starting to use it. Funds are starting to use it. We know most of the clients that come to Option Pit, that's what they want to learn about. And the thing with the VIX is there is some complexity in the product, but it's understandable complexity. And ultimately, once you understand how it works, the VIX works. So as to hedge volatility, and I mean, we're in one of those environments where it's kind of a little iffy. It's a lot easier to be long equities if you kind of have that blow up protection from the VIX by buying calls or call spreads or something like that. And to be honest, too, the VIX has been overvalued for probably most of the summer.
Wow.
So it's been a great short. So, either way, there's lots of ways to generate, to be short premium. You can go sell options, or you can buy puts on the VIX or something like that. So there's lots of ways to use volatility using the VIX. And I think as funds get a little more sophisticated and people in general get more sophisticated, honestly, liquidity begets liquidity. That's how the OEX got hot, until it became sort of the SPX. And now there's so much liquidity in the VIX options as it grows, it does sort of create the virtuous cycle where a fund needs a certain level to move the needle. Now, if they can move 1,000 contracts in the VIX, it's a lot easier for them to justify trading the product. And you just generate that virtuous cycle of volume.
Yeah.
And it's becoming much more of a known quantity as far as at least starting to understand how it operates. And, a lot of funds can't trade 100 lot. They can trade 1,000 lot though. So that now that those numbers are starting to be put up, Now guys can come in with 1,000 lots, 2,000 lots.
And the cycle continues. Yeah.
Exactly. And it grows. And then it becomes potentially, and I think that's a big part of the CBOE earnings, has been the close to block. Well, it is kind of a blockbuster product, really. There's no two ways about it. And it could be a good proxy for, the SPX. They don't, the SPX markets are still $2 wide. The VIX markets are only 20, 25 cents wide. So sometimes tighter. So it does make a pretty decent alternative to trading the index products. I mean, obviously you trade the two for, they work differently. Ultimately you can generate income and hedge using both products. You just have to you have to have another layer of understanding for the VIX in general. But I think volume begets volume, and that's kind of the underlier.
Well, one of the questions that I've always wondered, I think I know the answer, but you seem to be the resident expert in the VIX. Why does the VIX track the futures as the underlying as opposed to the cash index? Is it because of the SPX, what's used to calculate the VIX index and the expiring options that it uses to calculate that figure?
Well, it's because they just hedge. It's just when I was an XPX trader, even the cash settled SPX options trade off the future. And if you notice, all those values are going to be generated off whatever the future price is, and then whatever the roll is after that, month to month out. The VIX is very clean. It's a lot easier to trade if you price it off the future, because that's what liquidity providers can hedge as cleanly as possible, right? Because there's no way to use the cash. It's much easier to buy the options.
So why don't they move like the SPX in over to the S&P, E-mini S&P? I know that's what everyone uses as a hedge, but I mean, I know it doesn't use that as its underlying.
But they value the options off the S&P 500 future for the SPX.
Really?
Yep.
I've always thought they use the cash index.
Nope. They use the future.
There you go.
They use the liquid front month future. And just simply, it's a lot easier for a liquidity provider to hedge. So you might as well price off whatever the cleanest hedge is. And, the VIX futures work pretty good as far as, so they just use them as the at the money. So you'll notice the at the money of every VIX month is different, and it will be the at the money of the corresponding future for the month. So NOVE has the NOVE future, DST's future, and on.
And I've said this before, we actually block a lot of the trades in the VIX because people still believe it trades off the cash index and think they can, sell these things for a lot more premium than they're actually worth, less than parity. And so we usually don't allow people to trade those online, which is becoming a bigger problem as we get more people interested in the VIX and understanding the VIX. But so that'll have to change soon. But thank you for that. I think it's a product that continues to grow, and more retail clients will tip their toe into the waters. Another thing I wanted to talk about, because this happened about 3 months ago, and we talked about on the show briefly, and this probably would have been a little better timed for last week's show. But we do have the ex-dividend date for Apple tomorrow. It's a $2.65 dividend, and we had Tusaw pretty much call the top as he said he would be taken out of his. Were those 680 calls possibly? I mean, no less than 2 days later, that thing has never looked, never looked back.
Has seen that number.
I mean, I seriously will have to pull that show and chart it, because he said, I'm finally going to get caught out of Apple. I think it rallied maybe 1 or 2 more days, and then a tailspin occurred. And, we're down, 100, 110 from its high. And so we're not going to see the amount of assignments that we saw last quarter, and that was the first quarter, so it caught a lot of people that had held the stock or had traded, vertical call spreads. We had a lot of people that were simply, in a bull call spread or in a credit spread, vertical call spread, and they were being assigned and they were liable for the dividend, not realizing they couldn't exercise their long call to offset that assignment. So we reached out to about 150 clients today. Like I said, because of Apple's pullback here, it was probably a third of what it was a quarter ago. But we got a hold of a lot of people. They were, educated on the situation, and we had a lot of people close out of these in-the-money call spreads. A lot of people close out of buy rights because they wanted that dividend. and got in front of a lot of arguments that I was going to plan on having tomorrow morning. So I'm not sure what I'm going to do now, but be aware of that dividend. Yeah, now I just kick back on my coffee and write supervisory procedures. But it is only the second one. It will be coming out in about 3 months from tomorrow again. So getting the routine of realizing that is coming out and kind of position yourself to be ready to exit it in case you are at a point where your time premium is less than the dividend amount. Like I said, it's $265. If you have a deep in the money call and you have a wide spread and you're not sure what the actual time premium is, look at the puts and see what they're trading for. And if the puts are trading for less than the dividend amount of $265, you're most likely going to be assigned on that. That's kind of what we did to pull our records today and reach out to those clients. If the puts were trading more, we left them alone. But so we'll see what tomorrow morning brings. But I'm thinking it's going to be a lot calmer than it was 3 months ago.
Yeah, you'll have a couple of surprises. That's a good thing though that OX does. Again, it's full service treatment at discount prices. You guys should put that up there somehow.
I'm trying to get it copyrighted before I actually put it out there. That way I can get paid. But I
have a great line for Options Express. Full service at discount prices.
It's a great .com website. I happen to own it, but no, I mean, it's a lot of things. When we have the capacity, we try to do it, and even when we don't, service will suffer a little bit, but we try to reach out. We try to get in front of these things because I'm going to end up having to talk to these people anyway. It's better to, clients don't like certain situations, but when you give them a heads up and you give them the opportunity to make a decision on their own, they appreciate it, and they take a little bit more self-responsibility. So full service, like Andrew said, at $895.
And it's a great deal at that. Well, anything else here for the Express Block, Mr. Green?
No, that's about it. I know we got some strategy and mailbag stuff, and
yeah, I think we'll do a little mailbag. While we've still got everybody's attention, we'll throw the mailbag at them. There's a couple good questions for on the mailbag, and I thought we would address them here. So with that, we will close the Express Block, and we will dive right into the mailbag.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, everybody, and welcome to Viewer Mail.
There it is.
Yeah, I know. I had to get that deep baritone voice. Is that baritone or bass? Long ago. Bass. So we have a couple questions from a viewer, and I love the email handle, sigmundfraud@juno.com. Should we read that on the air? I don't even know. The guy's going to get 1,000 emails. So his question: I have a 401k that's invested in the S&P 500. Okay, good so far. I'm good with that. What's the best way to hedge it from downside risk? Would beta weighting with the SDS be a good hedge, or is there a better way? That is an excellent question. Well, I think the problem with the SDS isn't that the inverse of, because I don't trade the SDS, isn't that the inverse, the S&P 500? So as far as the beta weighting goes, you kind of have the same product. I actually have to pull up the SDS. I don't even know what that is. John, do you have an idea? I know that's an inverse product, so I guess you got to.
Yeah, it's an inverse S&P ETF. I think it's probably 2 times, but let me just jump on here real quick and find out. And I apologize, but I lost you there for a second, so I assume
no problem. I just talked to myself, so.
I assume we gave out the guy's home address as well as his email address.
Yeah. I think we gave it all out so everybody can find out.
Looks like a ProShares Ultra Short.
Oh, okay. ProShares Ultra Short. So the problem is if it's already the S&P 500, if it's ultra short, I don't know how beta weighting is going to actually work too well with that, because you're kind of, the index goes up, but the index goes out, and net, I don't think you're going to make any money on that.
And I'm not a fan of any ultra, or I don't mind the inverse. I just don't like the 2 times and 3 times. If you're going to do a short-term play, 1 to 2 days, jump in, jump out, you're expecting some high volatility and a time move, that's great. But I mean, these things over time, they're definitely not something I'd hold in a portfolio. I mean, just track them against the S&P if you want, and you'll see that they're compounded for their target for a single scrutiny in the industry. then the compounding returns. The returns over periods other than a day will be completely different. They should say will likely. I mean, so we had a lot of complaints about a year ago, and we try to make that clear on the phone. When people are trading these, but yeah, how are you gonna match that to a whole portfolio?
Yeah, I don't like anything that has any leverage for a product on a more than a 1 or 2 day basis. It just doesn't. They don't really work that way. They're kind of meant as a day trading product, and you should sort of keep them like that. But for except
for TVIX, I mean, that worked out really, really good. And in VXX,
drag everybody into the bottom of the ocean. The good thing about the VXX is it's reliably junky.
Yeah, so, but it sooner or later it's got to pay off, or does it? I guess not. Maybe
no. They just keep splitting it 4 for 1.
I love looking at that chart on a monthly basis. I mean, it's just like it looks like a NASDAQ stock in 2001 or something. It's just crater.
I know. Down 95%, and we'll just keep splitting it. So hey, people keep trading it. I think it's mostly they just have to keep the short interest happy. As far as hedging. The S&P, you know what? What's wrong with buying the SPY and selling some calls against it? That's a decent hedge. So, I mean, ultimately, if you're going to keep the SPY around, I don't think you can buy puts in a 401k. So I have never even tried to buy a put in a 401k before, but I know you can sell calls in it. So selling calls is a totally reasonable way to hedge some downside risk. So, just buying the SPY and selling some calls, which is... at least you hedge some, but then again, you're always long. You're still long the SPY. So unless you have any other 401k tidbits for hedging in there.
No, I would say, I'm a proponent of futures and futures options as well. So it's just the same strategy in that different product.
Yeah, because you can't buy an ETN or any. That's the problem. Like, if you buy a volatility product to hedge, you always have future decay. So it's not really going to work out over the long term. VIX options are better more as kind of short-term plays or like quarterly plays, and you can't buy a call spread in a 401k. So, I mean, that's, besides just selling calls, doing something kind of vanilla like that, or if you get nervous, you can overwrite the call or sell a more in-the-money call against the S&P 500. So, and then be prepared, though, if it rallies, to roll to another call or something like that. So it is possible. So instead of selling an out-of-the-money call, you sell an in-the-money call and give yourself a lot of protection that way if you're starting to get nervous. And if the market peels off, you buy back your short call, and then you can roll it up again. So, I mean, that's just thinking of ways that you could hedge, like let's say a regular SPY with options. Just, again, be careful of being assigned the day. The good thing about the SPY is the dividend is the day before expiration, so you want to remember that. But other than that, that's kind of the easier way. But I agree with you, John. You kind of stay away from the leverage products on a long. Yeah. Ultra means avoid. I have also heard the terms hitting offers and lifting bids. I hope I got that right. What does that mean?
I'm really glad he put that. I hope they got that right part in there too, because I would have been a little disappointed.
So in general, John, what would you? He's 50% right.
What, I would lift offers and hit bids.
Exactly. You would want to lift an offer and you hit a bid. And
actually, I would never want to do that, though. I mean, I wouldn't do that either. So I don't know.
I don't know what any of this means.
Yeah, the term lift offers, hit bids. I guess when you see something really juicy and you can't hesitate because it's not going to be there if you don't hit it, right? I mean, that's when you're trading aggressive and got a hunch, bet a bunch, and
I do. What I try to do is I grade it. So if you lift an offer or hit a bid, that means you need to get into something or you need to close something.
Need to close something.
If you need to close, you lift an offer or hit a bid, which basically you go to the market and you bang it out. If you want to do something, then to me, you're not lifting offers and you're not hitting bids. You're kind of sitting in the market, letting things come to you a little bit. So when you want to do something, you kind of float in the market or at the market. And when you want when you need something, that's when you're more aggressive and you just what we call lifting the market. You lift the offer or you whack the bid out like that. That's kind of how I think of that.
That sounds like our new product, the walk limit. Right? People are trading spreads, 2-legged, 3-legged, 4-legged spreads. We didn't create a tool that goes in and looks at the MBO as $1.50, and it says, all right, hit the bid, lift the offer, middle, and then works it and gets it filled at that ideal spot that, that zone where the true value of that spread should be trading for. But that's how you get into a trade. Yeah, if you're in a free fall like Apple or Groupon or any of the other value stocks that I seem to currently own.
Value stock. I like that. As a fundamentalist, I love a value stock, a good value like Groupon.
Usually when you're doing one of these, you're puking too. I mean, that's yes. you're calling it quits. You're throwing in the towel. You're hitting the bid. I'm out.
Done. I want no more of this.
Yeah, I can't suffer
anything. I will myself. I will Zynga myself.
There you go.
Feel glad that I exited at $5.45 in Zynga. I feel pretty smart now that it's trading like $2.20.
I've been talking up Groupon so much, I guess, out loud in the office that I literally got 3 other brokers to get into it this week. So not only do I look at my account feel bad, but I got to hear it from them as well too. So
I'm almost in sympathy. We're buying the 4.5 time spreads for 4 cents and 3 cents into earnings.
In Groupon?
That's my shot in Groupon. I'll spend 4 cents a time.
4 cents. And if you had a Groupon, you get it for 2. But
exactly.
That joke never gets old.
If I even knew how to use a Groupon, I don't even know I know what a Groupon is. I don't think I've got anything from Groupon. But I think that is our viewer mail. Again, both fine questions. And one of the many problems of 401ks is you can't actually protect your 401k in your 401k with options. They do is they allow you to really put on a buy right, which is essentially a cash secured put or a buy right, which is pretty much the most risky thing you could do as far as from a pure risk point of view, because you're just short puts, even though the market generally tends to go up. But you can't hedge in your 401k unless you're aggressive selling calls. So I think that's a problem. And I'm sure Mark Longo will address the Option Industry Council and try to fix all that the next time he is at one of their big meetings. But that's essentially one of the problems of a 401k. You have a hard time doing that. And hitting offers and lifting bids, I think we answered that to some satisfaction. Don't you think?
Agreed. Yeah, okay. Absolutely.
All right. So with that, we will close the mailbag and we will jump right into the strategy block.
The strategy block.
Okay, and welcome back, viewers. This is, again, Andrew Giovinazzi with John Griegas on the Super All-Star Duo panel for Option Pit this week. It is a lovely Wednesday afternoon after the market just had a fantastic, I guess, Obama-inspired rally. And we sit here now to talk about strategy. And on this one, I was just talking with John about, he was mentioning, what do you do with the VIX? So normally what we try to do is, because the VIX has so many layers in it, there's futures, there's options, there's, the value of it's derived from implied volatility on options on a future. I could sit here and confuse everybody for a while on that. But the long story short is, the VIX is the cleanest way to play a change in implied volatility in the indexes. So you think about it like, is the market going to become more volatile between now and sometime in the future, which is sort of how we present it to my students. And ultimately, right now, I think, well, between now and, let's say, Thanksgiving, when everybody's really thinking about turkey, probably not thinking about stocks too much, I don't think that the market is going to become more volatile. As a matter of fact, once the election is over, I assume we'll probably have some kind of an answer. I have a feeling these Greek politicians might do something. But again, that is, the wild card for me. So I couldn't really flat out go and get short the VIX. Normally I do that by buying puts in the VXX or buying put spreads in the VIX options themselves. So what I did this time is, the Greeks wild card. I'm not quite sure. I think if they do pass this stuff, the euro rallies, and then we're going to have maybe like we usually have is what, a 1 to 2 week euphoria period when we think the Europeans are actually going to get their act together. I don't really expect it to last too much longer than that. But if they don't pass it, then all of a sudden the Greeks can't borrow money. The whole Troika thing gets thrown out the window, and we could potentially have a problem. So I basically constructing sort of, I would say, as a binomial event where either all good news happens and volatility gets crushed because so much uncertainty is out of the way, which is generally how volatility works. Once the news happens, whoop, the air gets let out of it very quickly. Or we have a huge monkey wrench gets thrown into everything. Maybe the election doesn't settle, or maybe the Europeans decide that they never want to solve their problems. And for whatever reason, the VIX skyrockets to 21, 22 or something. On the market, we lose about 2% one day. Which, again, entirely possible sometime tomorrow. So what I did is you back spread the VIX. Now, the good thing about it is because of the construction of it, out of the money calls in the VIX are generally very expensive because everybody's worried about blowing out that way. So you buy a call spread. So you look at sort of an at the money, let's say 1720 or 1721, 1722 call spread. You pay about $1.75 for it. On the other side, you buy a put at around, maybe even the 16 or 17 strike. So you have a kind of a call spread in case volatility pops, and then you have a put on the downside. Now, the call spread helps finance that upside cost or be relatively expensive just to buy the call. Puts are relatively cheap in the mix. And you buy both pieces as a strategy, what you're basically doing is you're back spreading volatility. Now, I think volatility will probably go to 14 by Friday if everything works out how we think it's going to work out. That's kind of my crystal ball, maybe by middle of next week, certainly by the end of the no cycle. So if that happens, then your 17 puts are worth about $4. You ended up paying about $1.70 for the whole thing, and you basically have a 2-for-1 trade. If volatility explodes in the short term, your call spread will be worth about $3, which would pay for the call spread and the put you bought. You whack your call spread out, and maybe the volatility starts to come back in. That is trading a back spread in the VIX, and you use the call spread to help finance the whole thing instead of just buying a straight up call. And we've used that I don't know how many times so far this year at Option Pit of the Pit Report. Works pretty darn good, and it's a technique we like our students and our professional traders to use whenever we think there's potentially a big move in volatility coming and the prices really aren't too crazy for the options. And it generally works pretty good. So that's kind of our strategy trade for the day. Of course, for all of you that are listening, it'll probably be too late because by Wednesday afternoon, we will have known the answers most likely to both of our questions, and it makes the vol back spread way too late. Although you can probably pick up on a direction because I think whatever movement we have on direction on Wednesday will continue for volatility, moving that direction through the rest of the week. So that is my big strategy. Back spreading volatility. What do you think, John?
I think it's great. So how do you price the options knowing that they're possibly too expensive or on the cheap side?
Look at the VVIX, volatility of the VIX. Anytime I think you're in the low to mid 80s, I like to price that around $2 for the strangle. It's kind of almost a strangle, really. Don't want to spend too much more than that because you're at a 17 VIX. 3 to 4 points is a reasonable move. So I like to get, I think the max gain is like 2 to 1. So if you can price it, let's say spending $2 to make 4, I think that's about kind of the right, entry level for that type of trade. If you don't sell the call to make it a call spread, you don't get close. It ends up costing you like almost $3 for it. So
it's not worth it. Yeah.
Not really worth it unless we're talking about a VIX at 30. That's a different story. But also the VIX options are not trading, that's not going to trade $2 either at that level too. Those are much more expensive. But I think down here, that's kind of what I'm looking for. Around like 2 to 1 return, letting everything just move one way or the other. All right. With that, we will close the strategy block and we will move right in to Around the Block.
Around the Block.
And hello, listeners. Welcome. This is Around the Block. This is where we talk with our, I think, august panel on what they're looking at, what's crossing their screens, and potentially plug anything we might have going on in the near future. So, John, what are you looking at besides all the green on your screen today?
Hopefully that continues. And the economic calendar, pretty weak this week. And, going to be keeping an eye on crude inventories, which come out tomorrow at about 9:30 Central. Crude that has been on the slide over the past few weeks. Saw a nice bump today, up about $3 right now. Want to see if those inventories kind of hold true and keep the trend in place, or if this is the near-term bottom. So we'll be watching the crude inventories end of the week on the 9th. We got Michigan sentiment and wholesale inventories. But the big news obviously is going to be the election. It's going to be a clean one. We're going to have a repeat of 2000 where we have to go to a Supreme Court. What effect is that going to have on the markets for the next 4 years? If today was a precursor to the next 4 years, hopefully, we'll be trading 14,000 by, the spring of 2013. But inflation at some point is going to have to creep in here too. So I'll be keeping an eye on those bonds. They really did not have a big move today, which makes me think that, like I said, if we check the volume and it's low, that this rally was just kind of a few people taking a chance on the outcome of the election. Really didn't see confirmation, like I said, on the bond side. Other than that, probably looking at Europe and that austerity vote that you had mentioned earlier in the show. Really, that hasn't been in the news as much, but it needs to be paid attention to. It has affected us in the past and probably will so after we get through this election madness. Thank God it's over. Saw one too many commercials. Thank God for DVRs as well, where you can push through those.
Brutal.
It's brutal. You see these ads, and you think, why would I want any of these people to be in public office and represent, my district or my family?
Do you want babysitting your kids?
No, they're just so negative. It's just so I think we'll be watching the election results both nationally and a little closer to home. What Options Express has coming up around the block? We have our live site nights that I always like to mention as well. If you are an Options Express account holder, you can go into the events section under education, and it looks like Hurricane Sandy has hijacked my computer, so I have no idea what they are. Here we go. 1 second here. It's always nice to be on Wi-Fi from about 30 feet away from the servers and can't get any type of connection. But the live events here. What's that?
Technology. It's a wonderful thing.
Oh, it's at its best. It's not procedure to be hardwired into a laptop. Okay, whatever. So we have our webinars on the website as well as our live events. Check those out. I'm not able to bring it up at this time. Yes.
So as I say, OX is doing stuff. Go to the OX website, log in, and you guys definitely got some sort of stuff planned.
I mean, we got tons of webinars. They're all free. They do require an account, but like I said, it is free to open up an account. Joe Cusick, his face is painted all over the website. He's got about 30 live videos. So here we go. So the live events now with Google Maps, we have Denver coming up this week, November 10th. We have Houston, December 1st, and we have Boca Raton, home of the third presidential debate. Not like that disaster on the East Coast, but on December 8th. So if you're in the town, check those out. If you have questions on how to register, just give us a call.
All right. Well, thank you. Let's see. For me, what do we got for Around the Block?
Yeah, what are you watching out there besides the VIX?
Again, I'm watching VIX FXE. Again, cheap vol in there. Kind of selling some put spreads in a few, I think, kind of dowdy little stocks, like the Microsofts, the Wells Fargos, things like that. Looking at a few of these earnings, we've been looking at cheap time spreads in a lot of these earning stocks, Cisco, Groupon. No plays that are really crazy. certainly not doing as much as normal, kind of waiting for the election to play out. And we have some election plays, but that's literally about it. I don't, I kind of think the market's going to, move in fits and starts. You might have some fiscal cliff wrangling, but other than that, that's about it. And just most likely a lower volatility environment. The Europeans are kind of like, it's like the space program. Early on in the space program, that's all anybody talked about is in the news. And then after a while, everybody gets tired of it. And it just is not on the front page anymore. And then all of a sudden something bad happens, unfortunately, and it gets back into the news. And I think that's kind of where the Europeans are sort of sitting with everybody. And that's also what's happening to, I think, and it weighs on, the equity market, and it weighs on a lot of fund managers. They're watching it, but just popular news is really not anymore, even though it's still very much an issue somehow or another. So, and that's the stuff I'm watching. As far as what we got, our big event with the CBOE is coming up. It got postponed because of Sandy kind of screwed everything up, as those nasty hurricanes do. But the event is now Saturday, December 1st, all day with Mark Sebastian, Jim Bittman, and Jill Malandrino of the Street. And they take a look at how volatility helps you with trade selection, earnings events, and trying to forecast market direction based on what people are paying for options. I highly recommend it to anybody that wants to learn about volatility. That's usually you got to stick your toe in somewhere, and that's a good place to go. So the Street, CBOE, and Option Pit have a joint seminar on December 1st. Go to optionpit.com/events and sign up. And I think it must be that time where now we are the Super All-Star Panel, by the way. The Super All-Star Panel has to bid adieu, and we are going to close out this edition of the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.